Hey everybody, Larry Berman here. Happy Father's Day to everybody. Happy Grandfather's Day and happy birthday to me. Happy birthday to me. So, yeah, June 15th, 1965 was a big day in the life of this guy here. Um, my birthday always falls on Father's Day weekend, just about all the time, and of course that is for an avid golfer like myself, U.S. Open weekend, and so pretty exciting there. That's where my focus is right now. But very quick peek into the markets this week and see what happened. The FOMC released their dot plots and surprised the market to their hawkish tilt, where they basically took out from last month two rate cuts this year. Market, while it was going the other way before, now is going this way, meaning they don't believe the Fed's forecast and will actually see two rate cuts this year. Now, with every piece of data that comes out, obviously CPI, PPI, very, very friendly, very cold in terms of economic numbers this week. The bigger picture here is that the longer term expectation, both for 25 and 26, 25s came down a little bit from what it was, but that's because they basically pushed one of the rate cuts they were expecting here into here, but ultimately still notched up from what it was before. And, we saw notches up here and a slight notch up too in the longer term expectations. When asked in the press conference what the dots meant, Powell said, oh, they mean nothing. They're just us guessing at things. And, he came across dovish as he does. And really the data has ultimately supported that. When it comes into, looking at the bond market, obviously we saw a rally. The 30-year bond auction on Thursday went well following the inflation data of the week. So, you've got this momentum here where guys were starting to lean against it. Now they're coming in. I don't expect the US 30-year to get any better than the 420 area, maybe 425. So while there might be a little bit more to go, what I'm doing in my bond portfolio right now is selling calls, covered call, getting extra income and hedging that duration risk, because again, I don't see it doing this anytime soon. Having said that, a lot of focus on that initial claims report this week that ticked up notably from recent weeks. And so next week, if we see a continued persistence in initial claims, we then start to have to think about a real decay in markets. So what does that all mean for equities? When you look at the makeup of the market this year, I'm looking at three ETFs right here. Russell 2000, small caps, a year-to-date basis, with today's market. So let me see if I can change this to the 14th and get today's pricing in there. As you could see with today's move, small cap stocks down on the year. When you look at today's move and you look at the equal weight Nasdaq and the equal weight S&P 500, the message is very, very clear compared to when we look at VTI, the entire U.S. market, which includes mid and small caps. And of course, when we add in, not RSP, SPY, and look at the market cap weighted return this year, we get a very, very different picture. And of course, if we look at the market cap weighted Nasdaq, it is plainly clear and obvious where the lift is coming from. And so all this lift in the equal weight index is all coming from that small handful of stocks. And so what does this tell you? I'll tell you what this tells me historically. When small caps are not performing, when the average stock is not performing, the economy is not as strong as the headline index seems to make it be. Anyways, that's all we have. The message is still caution. I mentioned months ago back in here at these highs that I shifted the vast majority of my portfolio into private investments. I still think that's the way to go. I still think being defensive here and having exposure to assets, but doing it differently so that when we do get a correction, your volatility response is going to be better, as opposed to selling and going to cash and doing all those kind of things that people do in traditional markets. I think the need for alternative asset classes and alternative ways to protect your portfolio going forward are needed more than ever. Anyways, you can send me an email or ping me or something on social media and try to find out more. You can reach out to any of the partners at Q Wealth that have great solutions for the end investors in these areas. Have a great week, everyone.